I think intuitively everybody knows that the current system we have is pretty broken, and that's on an individual level, but on an institutional level, and what I mean by that is just on a sovereign government level. I think the countries are trying to figure out what is the best path to take from here, because clearly the U.S. dollar is on the way out and is losing power. And really, I think the a lot of what's happening with the Russia-Ukraine invasion is the East trying to kind of flex their economic power over the world and try to almost decouple from the US dollar system.
Hello, everyone. Welcome to another episode of the Oto Gomes Crypto Show. My name is Oto Gomes, and today I have Brian Velez. This guy has gone above and beyond in research, schooling himself, and knowing the different layers of this reality when it comes to economics, the Federal Reserve, the U.S. Treasury, just the different layers that create the financial system. After finishing with a degree in applied mathematics and economics from Columbia University, Brian is now an investor, founder, and orchestrator to a digital asset fund called Netizen. Brian is a genius on global macroeconomics and is now bringing that expertise to the crypto space. And I am grateful for his wisdom and am excited to share that wisdom with all of you today. Ladies and gentlemen, Brian Velez. Ladies and gentlemen, Brian Velez. Did I say that right? Velez?
Yeah, that's right. Thanks for having me, Otto. Thank you.
Absolutely, brother. I thank you for your time, your energy, and literally, I'm sure you put so much hours into writing that write-up that you send out on a monthly basis.
Yeah, I mean, it used to take me probably like 20 hours. I do it every month. I come up with this letter, a public letter for my friends and family, just to kind of follow along. But I also accompany that with a private letter for my investors. And typically, it was taking me about 20 hours a couple months ago, but I'm getting it down to maybe like 10 to 15. So I'm getting a little bit better organizing my thoughts, but it's a good exercise for me to do, and I'm always happy to share the information as it comes into everybody.
I love that. And I think that's like a truth about anything in this reality, right? You put in the hours, you put in the 10,000 hours of mastery, the time to get that thing done will get shorter and shorter.
Yeah. And that doesn't even include all the reading that goes behind it all, right? I'm usually sifting through a lot of signal and noise, and then kind of taking through the high level key points that I want to touch on during the letter. So just distilling all that information together, there's a lot more that goes behind the scenes for sure.
So let's get into this journey of yours, and how you got to this point where you're focused on economics, you're focused on trading, you're focused on fund management, and now a little bit of crypto. So I just want to know your journey to this point, and specifically, if you can hone in to the red pill moment that really shook you out of this freaking matrix.
Yeah, so you kind of alluded to this in the beginning. So I studied applied math and economics at Columbia. I graduated in 2014. My first job out of that actually was at a small hedge fund. So Netizencapital.nyc. We did like event-driven, long-short equity trading, equity options trading. Really interesting stuff. So like we work pretty long hours. We'd get into the office super early, especially during earnings season. So earnings came out for companies. We'd be trading around that. If there was a merger or acquisition, we would trade that, or if there was a pre-announcement, that sort of stuff. So very event-driven. That's actually kind of where I first discovered. Or I got my first taste of Bitcoin, and in terms of just kind of its relation to the economy, because we would always be on these Fed meetings. Every 6 weeks, the Fed's having this meeting. We would always go through the Fed minutes and kind of tie that into markets. But I actually was first introduced to Bitcoin in 2013 through one of my classmates, actually at the time. And at the time, I was 20 years old. So I saw the white paper, but I looked over it. It didn't really kind of stick with me. But then once I saw it again back in 2016, 2017, it really started clicking. I was like, oh shit, like this whole thing is actually really relevant to what's happening in the economy. Because at the time we were coming out of 2008, quantitative easing was on the rise. People were starting to print more money. And I was kind of starting to tie it together and say, oh, wow, the current monetary system we have right now is fundamentally broken. And Bitcoin is a potential solution at the time. But obviously now I think it is the solution. But it's been a long journey. And I've been in the space now for probably 6, 7 years, trying to red pill or orange pill my entire friend and family base, and even my coworkers and everything. I'm sure a lot of them are probably looking back and like, damn, I probably should have listened to Brian back then. But I think there's still time for many people to get involved. So I don't think the ship has sailed quite yet.
It's funny. It's like if I had a dime for every person that came to me now and go, man, I should have listened to you, I wouldn't need crypto. I'd be rich.
100%.
I can definitely relate to your story a lot. My whole journey started like 2013 as well. And but I think because I had an accounting background, and my dad's like really into math, and just that was always part of my family. I quickly picked up on the white paper and went into it.
Yeah.
But anyway, that's a great story. It brought you, at least gave you the awareness early. You got the awareness early on enough to now create what you've created. So what kind of drove you into the direction of creating your own fund and working towards that direction?
Yeah. So just to kind of wrapping up my story. So, I worked initially at this hedge fund for a little bit. It was about 10 of us who were managing about, around a little over $50 million at the time. I left that though to work at an investment bank. So I left to be a research analyst. So I worked at Cowen and Company. I covered beverages, tobacco, and cannabis as equity research analyst. So if you ever watch CNBC, when they're saying, hey, Apple's a buy or, Google's a sell, like that, my boss was the one going on TV making those calls, and I was behind the scenes writing those reports. So actually seeing that kind of how the sell side works in financial markets was really, really interesting and eye-opening to me. You just realize that it's a lot of marketing, and it's a lot of bullshit, to kind of put it politely. A lot of people are making money off of the institutionalization of finance. And what I mean by that is there's a lot of, we're raising money for companies. We're trying to IPO them, and we're trying to find investors who have way too much money to know what to do with it, to put money into these companies. So at the time, when I was working there in 2017, 2018, we actually IPO'd some of the first Canadian cannabis companies. So there was so much interest, and cannabis is a good analog to crypto because very, very much retail driven. There's a lot of hype around it. A lot of people want to get involved, but don't know necessarily how to get involved. Meanwhile, you have these institutional funds who are really trying to allocate millions, if not billions of dollars into the industry, because, this is just money trying to chase opportunity, right? And you see the same thing in crypto also. But it was interesting kind of getting that point of view. But sitting in that chair as a research analyst, I saw these guys making a lot of money. And meanwhile, I was kind of the weatherman, so to speak, kind of saying, oh, next quarter earnings are going to be up or down. And this is a buy rating, this is a sell rating. I actually wanted to be in the trenches and actually operating a company. And so that kind of led me to leave eventually from working at Cowen. I learned a lot, obviously, there. But I ended up starting up my own business. So I actually own and operate a gym in Brooklyn, New York. So that's kind of like a passion project for me. I've been an athlete my whole life. But I've never lost love for the financial markets. I just wanted to work for myself. And so I continued following the markets a lot. And during March 2020, during COVID, when we got shut down, I really started leaning a lot more into following the markets, following the global economy, and just kind of leveraging a lot of the information that I learned over the past, decade into kind of what should I be doing for my family and myself in terms of investments. And so that really started getting me focused on putting out more content around crypto, putting more content around the economy, what's going on, and kind of where we're headed. And that eventually kind of snowballed into people reaching out to me to invest on behalf of them. And so now at this point, I have about 50 investors, just family and friends funds, kind of starting small, but just trying to prove myself and see what I can do with managing some money now.
See, what I love about you, Brian, is that you have that entrepreneurial bone in you. That entrepreneurial itch. And so that to me is there's almost like a weird perspective towards entrepreneurs nowadays. Like, oh, well, if you just want to make a buck, you just want to make money. You're just trying to push a product. It's like, well, what are they doing? What kind of world are we living in if we're not pursuing the things that bring us joy and the passions that we want to pursue, if we're not doing that for ourselves as well? Entrepreneurship, in my opinion, that's true capitalism. That's the real way that we should be going, not this distorted, pretty much socialistic situation that we're moving towards right now, this tyrannical socialistic situation. It's so weird. Such a weird time to live in. But I love, like I said, I love that perspective of yours, and I love that you have it in you to now speak out and to like actually put out content about that. And I know that you started with your letter, and you're trying to grow that out and get more people, more eyes on it. Because, and I support you. I support you because that write up, it's like you write a little mini book every month. So let's go a little bit into like the current situation, the current markets right now and what's happening. I've been seeing a lot of conversation around, are we going towards major inflation, like hyperinflation? I've seen recently some tweets about 401ks losing 10 to 30% in the last couple of years. So what is going on? Help.
Yeah. So it's, I'll try to start as high level as possible, but this is such a nuanced conversation that we could really go in a lot of different directions.
Sure.
I think in terms of just, there's been a proliferation of passive investing over the past kind of decade, I would say, where people just kind of lock their money into a 401k. And that's really kind of pushed through corporations. And that's a whole different story, because before corporations offered 401ks, they used to offer pension plans, which they've gotten rid of. And actually a pension plan is probably a better way to offer retirements for people. But now we've tethered people's retirements to the stock market, which was an intentional thing that was done many decades ago. But I don't want to drive too deep into that. But
let's not go down that rabbit hole, but it is a rabbit hole.
It is a definite rabbit hole I think people need to consider, right? And I think, the standard wisdom for what to do with your retirement money is to, hey, just, put your money into a 401k. It's kind of this forced savings vehicle, but people don't really think about what they own, right? And the problem is that a lot of 401ks, unfortunately, because you do have limited options with what you can purchase, they all gravitate towards the same stuff, right? And everybody who owns a 401k owns Facebook, Amazon, Apple, Netflix, Google, Meta.
It's the safe bets.
It's the safe bets, right? And it's funny because if you even if you pull up a chart right now of, I think Google or Facebook are good examples of this. I think they're down 30-40% over the past 6 months. And it's funny, you have the SEC always coming out trying to protect investors, but they don't say anything whenever these stocks are down 40-50%. And you wonder why these stocks were up that much to begin with. And the reality is, if you just plot any stock, the S&P 500 across against M2 money supply, which is the money supply printed by the Federal Reserve, they're in lockstep, right? And so the reason why the stock market, everything goes up until it doesn't, is because for the past 10 years, we've just been pumping unreal, obscene amounts of money into the economy. And we saw this with COVID again, right? In March 2020, I think the market was down about 35%. And, over the past couple of years, we pumped in about $4 trillion into the federal balance sheet, which is now about $9 trillion. So we basically,
which is like what, 20% increase in the last couple of years?
It's about 40-50% basically over the last 2 years.
Oh, whoa! I've been saying 20%, so I was way off. Holy.
Yeah, so it's an insane amount of money we pumped into the economy, and that goes through. When we do quantitative easing, people don't understand that money is really going through the bond market. But when you distort the bond market, right? So as the Fed continues buying U.S. Treasuries, that causes yields to go down. That actually makes it more attractive for risk assets to be purchased. So risk assets are stocks, right? So any tech stock, as bonds are being purchased by the Fed, there's an indiscriminate buyer there. People are just going to keep going down further out on the risk spectrum. They start buying tech stocks. They start buying ARK. They start buying crypto, and they think they're geniuses because these things just go up and up and up. But the real driver of that is honestly Fed monetary intervention, right? And so now we're kind of seeing the opposite of that happen, where last November, the Federal Reserve, because of inflation being near high single digits, the Federal Reserve is now saying, okay, we need to fight inflation as a key priority instead of keeping the stock market inflated, right? And so we've kind of seen this really big regime change within the Federal Reserve. And this is also a political thing as well, right? Because we do have the midterm elections coming up in November. Obviously, the Biden administration, the biggest pressure they're receiving is that consumer price inflation is very high, right? And so the one way you can fight inflation is by killing demand. And so that's really what the Federal Reserve is trying to do. And that's what they've said they're going to do over the coming months is they're going to be raising interest rates, and they're also going to be tightening the balance sheet. So actually, instead of buying U.S. Treasuries through quantitative easing, they're doing what's called quantitative tightening, which is just rolling off U.S. Treasuries off their balance sheet, which that causes more problems down the line. But this is all to say that the Federal Reserve and politicians, although they won't say it, they do want the stock market to go down, because a lot of inflation and the wealth effect, they're really looking for the negative wealth effect, which is when the stock market goes down, people feel less rich, so they're less likely to consume. And so that means demand goes down, and therefore inflation comes down. So we're kind of, for the past 10 years, the old mantra has been, don't fight the Fed. And that was on the way up. But now we're kind of seeing this like 180 reversal starting 6 months ago, where it's, don't fight the Fed. They're taking liquidity out of the markets. They want the market to go down, and earnings are going to come down from there. And then, growth is going to start slowing down. Inflation will eventually come down. But I think a lot of investors aren't prepared for that, because for so long we've kind of just been reflexively trained to buy the dip every time the market's down, right? And my last letter I actually came out with a couple of weeks ago was specifically called "Don't Fight the Fed," or don't buy the dip yet. Don't buy the dip yet, because I do think there is way more pain to come, and the Federal Reserve is not going to bail us out just yet. I think they are going to come in at some point within the next couple of months, probably before the end of the year. But in the next couple of months, I think we're going to probably see a lot more pain in the stock market before they come to the rescue and print some more money.
Now, I have a question specifically around stablecoins. Back in November, I don't know if you're aware of all of this, and so I'll just share some of it. But back in November, there was a report that came out from the U.S. government. It was like a combination of 3 departments, I think, and all around the Federal Reserve to talk about stablecoins. And basically, I kind of went through it, and it's like, this is a threat. We need to regulate it. Basically, is what they said in this report. And since then, I have noticed a massive increase in not only the scrutiny of the government around stablecoins and the conversations now being centered around stablecoins, but stablecoin projects popping up, a lot of stablecoin projects popping up. And I even saw this tweet recently that said that stablecoins are one of the largest Achilles heel of the crypto ecosystem for a lot of reasons. So, and then on top of that, you have also the announcement of last year of the Federal Reserve announcing CBDC, the central bank digital currency. So what's going on here? Do you think that these plans that they're coming up with, quantitative tightening and all these things to bring down inflation, does that have to do, these plans that they're announcing, does it also have to do with all of this stable coin conversation?
Yeah, I mean, I think it does, right? You got to realize the fundamental problem that we're all kind of dealing with here is that we are in the middle of a global sovereign debt crisis. And what I mean by that is that governments are bankrupt across the world and currencies are failing across the world, whether we see it or not, right? And when I say currencies are failing, really what I mean is that we are approaching the end of the US dollar system as we know it, which was really established in 1945 after World War II with Bretton Woods. But then we broke off the gold standard in 1971, but the US dollar still retained, its power over the other fiat currencies. But that system is unwinding very quickly. And I think, the introduction of a central bank digital currency or even a stable coin, stable coins are seen as threats to fiat money, right? These are alternatives to US dollars, and every stable coin is pegged to the US dollar, right? It's not, you don't see like a stable coin euro. It's the US dollar because that's the system we have set up. So I think, if you think about where, this current system, current monetary system we have is with the US dollar at the center of the world. Obviously, China and Russia with the recent invasion of Ukraine, they're trying to challenge the status quo, and China would love nothing more than to topple the Western regime of the Western monetary system. So you're kind of starting to see this bifurcation between the West and the East. And then in terms of regulators, what they're trying to do is China's been very, very pro CBDC. They're trying to come out with their own Chinese central bank digital currency, the digital yuan, which I think they're already testing out in some local provinces already.
Yeah, I read that too, that they're already starting to start it.
They're very ahead of the curve on this, because you got to realize China is also a control and order economy, right? It's a state-run capitalist country, or what's it? They call it state. It's state-run capitalism, but it's really social capitalism, whatever you want to call it.
It's communism.
It's communism wrapped with
a pretty bow.
Capitalism. Yeah, exactly. So it's in their best interest to have a central bank digital currency. I think it's interesting that the United States has been pretty slow to develop one, because I do think that there is a lot of there is a lot of hesitation and caution around the central bank digital currency because, I mean, just think of it logically. I mean, who wants a bank account directly with the Federal Reserve? I mean, where does this end? Are we going to start getting direct stimulus payments from the Fed? Is Citibank and Chase going to be disintermediated as your banking relationship, right? Like, yeah, they can start doing selective monetary policy where they, if you're younger, you start getting more stimulus. If you're older, you get less stimulus. Like, it kind of opens up a can of worms of opportunities. And I think that's why China is so adamant on pushing a central bank digital currency, because they do want to control their population and tell you what you can and can't spend your money on. And so, in a positive note, the US has been, pretty slow at developing a CBDC. The Federal Reserve also came out with a paper earlier this year, kind of weighing the pros and cons of a central bank digital currency. And it was pretty inconclusive. They weren't sure. The major conclusion they came out with the paper was they weren't sure if a central bank digital currency would cause more risks than positives, right? Which I think is good on the margin. And you would hopefully expect that from a quote unquote free thinking country. But yeah.
So I don't know if you saw on the news recently. I want to share this video right now with you. I don't know if you saw it, but they're giving so much power to the Federal Reserve. It's not even funny. So look at this.
Yeah, audio on this? It's not playing.
Oh, is there no audio? Was the audio not coming through?
And I'm not hearing it.
I'm gonna have to add this video later. Okay. So she's basically saying, I don't know how to, it's Zoom. I don't know how to do this. So she's basically saying that, like, because somebody asked her about, the inflation and just with the Federal Reserve and going like, hey, what are you going to do about it? And they're like, well, she actually says this. She says, well, the chair to the reserve chair, basically they make their own policies, and we kind of just adjust to their policies, whatever they want to do. And it's like, what are you talking about? What are you talking about? That's a private organization you guys are giving so much power to. So what you're saying is interesting because it's true. It's like, what are we doing here? Are we is another daddy government?
Yeah, I mean, the way politicians, the way the White House phrases inflation is really, really disingenuous, and it's really frustrating as somebody who studies this pretty much 24/7. I think I saw the speaker being asked earlier about, I think she was trying to blame inflation on the Putin price hike, and inflation was beginning way before Russia invaded Ukraine, right? Supply chain disruptions are happening because of Ukraine, and that's affecting the oil and gas market and also the agriculture markets, and that's going to obviously trickle into the rest of the economy. But these issues were already happening pre-Putin's war, right? And so, I think I also saw a tweet recently about Biden said that the inflation was a function of the way we fight inflation is by making the top 1% of corporations pay their fair share. And I think Jeff Bezos replied back, like, this is absolute nonsense. Like, we don't have, first off, taxing corporations more money is not going to fight inflation. Yes, we should probably do it, honestly, right? I think we should 100% tax corporations more, but that's not going to solve inflation at all. So it's just, there are a lot of narratives coming out of the White House, and I think it really confuses a lot of people because most people just generally don't understand what money is in the first place and are never taught anything about basic economics. And so these are really, really tough, complicated issues to kind of parse through. And so, when you have kind of this overlord government kind of explaining or telling you what to think about it, it really kind of muddies the water from, truth, unfortunately.
You mentioned earlier about the this kind of fight that's happening right between the Eastern markets, Western markets, China and the US here. With this shift into digital currency, do you think this fight, because you mentioned that like the US is behind. We're behind in creating this digital currency. So do you think that there is some sort of fight happening right now? This is a massive metaphorical fight, I guess you can layer it as, between old centralized money, old centralized systems to this new decentralized way. Because I'm speaking from just my own perspective. It just seems like the narratives are they're conflicting with each other. Like these massive these leaders in these industries are conflicting with each other, which has never happened before. So what do you think is going on right now?
Yeah, I mean, I think the principles that Bitcoin gives, being decentralized, uncorruptible, scarce money, I think in general everyone agrees with it. I think the problem is from the Western side, the US wants to maintain its dominance over the dollar system, right? And so any loss of the US dollar as the global reserve currency is seen as US weakness, aka that's an opportunity for the East to make a move to have a better or a greater kind of global influence on the economy. And so I think intuitively everybody knows that the current system we have is pretty broken, and that's on an individual level. But on an institutional level, and what I mean by that is just on a sovereign government level, I think the countries are trying to figure out what is the best path to take from here, because clearly the US dollar is on the way out and is losing power. And really, I think a lot of what's happening with the Russia-Ukraine invasion is the East trying to kind of flex their economic power over the world and try to almost decouple from the US dollar system. So actually what you're seeing is in Russia, they're only willing to trade oil and gas with Europe in exchange for rubles. And so that's the Russian ruble. And so and really they're trying to defend their currency but once they trade their oil and gas for rubles, they're turning around and buying gold back. So they're trying to back their currency with gold. And China has done stuff like this in the past as well. And so I think there could be a potential move towards a commodity-backed currency in the future, right? The current way we have it is basically we have a trust-based system for currency with the US dollar. People just accept the US dollar as the global reserve currency because it's backed by the full faith and credit of the US economy and also the US military. But that's breaking apart, right? And so I think the Eastern powers are trying to figure out a way to back their currencies with commodities because Russia is one of the largest net energy exporters of the world. And the reality is, in a world where money is infinite, the value of commodities, which are scarce, become infinite, right? Because we can't print oil and gas, we can't print precious metals, we can't print wheat, corn, soybeans. These things have to be grown. These are real products that are created in the economy that require energy to create them. And so I think you're starting to see this kind of bifurcation between both economies. And I actually think it would be a really good strategic move if the US did adopt Bitcoin, because the Bitcoin network is backed by electricity, right? Backed by these miners, and a lot of energy companies in the US could use their excess energy to mine for Bitcoin. And so basically you're secure. Basically what Bitcoin is energy-backed perfectly scarce currency that's privatized, right? And I think that's kind of the movement that we need to make towards. But we'll see how this thing unfolds. I think over time there's going to be more interest in Bitcoin and even other cryptocurrencies as a way to kind of break away from the old system. But time will tell who's going to be more crypto friendly in the future. So far, it's been the US, but I'll hold my breath until it's actually happening.
Well, then you're probably going to die from holding your breath. I'm just kidding. It's such a weird time that we're living in, man, because you see now these governments doing, like, I've been in the crypto space for almost a decade. And back then I remember thinking, like, because everybody was coming at me like, you're crazy. This is magic internet money. What are you doing? And now I'm seeing like governments shifting their whole ecosystems into this thing. And I'm like, whoa, it's really happening. Like, things are moving. And recently there was this chart that went around. It became a little viral. Not as much as I'd like it to be viral, but I had it checked. I wanted to make sure that it was a real chart and the math was sound. I had a mathematician friend. I don't know if you've ever seen him on Instagram, Robert Edward Grant. He's really into like universal or fractal geometry, that kind of math, like universal math, sure. Universe math, and then cryptography specifically. He actually even created a whole project, a whole crypto project, and it's a quantum resistant blockchain. I don't know. He's a mathematician, so I trust him. But he checked this chart and he said, actually, not just for the fiat. That's all he said to me. So I'll show you what the chart is. Essentially, it's somebody created a chart and it showed a correlation between the inflation rate of fiat, just dollars, to the deflation rate of Bitcoin, just Bitcoin. Mm-hmm. And the time, there's a chart, the time frame essentially that, let me just show you the chart. I think it's better if we just show you the chart because it's complicated. I'm trying to explain something that I don't really fully understand myself. So that's why I wanted to show you to see what your thoughts were. And luckily this one doesn't require any audio. All right. So, All right. So
Yep.
if we look here, this is, they called it a Bitcoin stock to FOMO hyperbolic model. And essentially it gives us a date. If you look here, it says, due to the forever rising value of Bitcoin and the forever declining value of fiat, there will be a day after which no one will exchange even a single Satoshi for any amount of fiat. This model predicts May 21st, 2029. And this is obviously, yeah. He said like, if nothing changes,
Sure.
if they don't do anything, this is where we're going. This is what's going to happen.
Sure.
So what are your thoughts?
I mean, I think there's 100% truth to this, right? Because at some point, we are going to have to print money again, right? And if you're just looking at history, every time we've printed money, every time we've printed money, we've always printed more. So, back in 2008, the global financial crisis, the TARP deal that they passed to bail out the banks was $700 billion. To come out of COVID, it was about $4 trillion. And so, I suspect that, when we come out of this next recession, and the Fed is forced to pivot on monetary policy globally, I think we're going to probably print more than $5 trillion again. So kind of begs the question. It's like, yeah, this is a cyclical thing that's happening with tightening and easing of monetary policy. But at some point, we're devaluing our money at an exponential rate, right? And, again, to my point earlier, in a world where money is infinite, the value of scarce assets goes to infinity because you can't print some of these things, right? You can't print more Bitcoin. You can't print more oil and gas. You can't print more food and agriculture. And so these things are going to, unfortunately, inflate in value. And that's going to cause a lot of pain for people. But it's almost a mathematical certainty. Unfortunately, people still have not wrapped their heads around that. And I do think, just off the top of my head, I do think the next decade is going to be pretty alarming for people. I mean, I think we are going through this fourth turning. And we're going to see a massive economic reset, or socially, politically, and also economically, this massive global reset and reordering of the world over the next decade. And I think Bitcoin is going to be a big part of it because people are inevitably going to lose faith in government currencies. And I mean, you just look at the news. I mean, the amount of distrust in centralized institutions continues to grow by the year, and for very good reason too, right? You can't just continue to blindly trust in people who clearly don't have your best intentions at heart.
Oh yeah, and again, the last 2 years could not have been more clear about that. Like of the direction we are moving towards if we keep up the pace. Man, weird times. Yeah. Weird times. Things are volatile. Things are moving. Things are shifting. So, what would you say is the best route for the person here listening? That what's the best decision that they can make? Let's say it's just somebody that is in their 50. I mean, the younger generation, I think they can figure it out. I'm really worried about the older generation, the ones that have normalized and gotten used to. And when I say older, 30 and above, it's not that much older, that have gotten used to and normalize that old system. And they're so wrapped up in their daily lives that they're not looking at this stuff. They're not, consciously thinking about the next 10 years. They're looking at the next 6 months. So what would you recommend for these people that are listening that have started to get this awareness and going, okay, I need to shift some stuff here?
Yeah, I mean, in terms of just, I'll kind of break it through short term and kind of long term. In terms of short term, and I would kind of consider that probably the next 6 to 12 months, we are probably headed for a recession. I think it's almost a certainty at this point. It's just how the cards are going to unfold over the coming quarters and months. The Fed is tightening monetary policy. Your 401ks, your stock market accounts, your brokerage accounts, your crypto accounts, those are all going to go down, right? So to actually, ironically, in a time where inflation is over 8% per year, it's actually probably a good time to actually own cash instead of owning stocks, because even despite the inflation, you are going to protect your purchasing power on a relative basis. And really, what I'm waiting for on my end in terms of the fund and investing is I'm waiting for the Fed to turn and pivot on monetary policy. And what I mean by that is I want them to start cutting interest rates again. I want them to start doing quantitative easing again. And that will be my signal that the money printers are turned back on. And that's when I'll go balls in all along on everything, all along crypto, all along tech, all these nice names that people like to have, like ARK and such. So I think there's a timing aspect to it that a lot of people don't want to follow because it's just too confusing to follow. But I do think that there's going to be a lot of weakness in the markets over the coming 6 to 12 months. Obviously, it depends on what the Fed does. And once they intervene, that'll be the kind of the buy signal for you. And hopefully that'll happen when there's enough pain, but it's not quite yet. There's definitely still more downside from here. And then just on a practical note, if you don't want to worry about timing or anything, I think the safest thing you could do probably is to start allocating some percentage of your savings or budget to purchasing Bitcoin on a recurring basis. So dollar cost averaging into Bitcoin, especially right now where Bitcoin is, I think, around $30,000 today. I mean, these are just 10 years from now, you're going to look back in time and you're going to tell people that I bought Bitcoin at 30K and they're going to look at you like you're crazy because it's now trading at $1 million. And so I know people, think that's a pie in the sky number. It's actually not. A lot of this is based off of, even that chart you showed. I
was going to say that chart shows that in 2 years, it's going to be in the 10 to 20 millions in 2 years.
Yeah. I mean,
it's crazy, but
I think that's pretty aggressive. I mean, in terms of the original model that was based off was called stock to flow. And so what stock to flow does is stock to flow looks at, this is used in commodity markets. That's how you determine if how much of a commodity is produced per year. And so like the stock to flow for gold is about 50 to 60, which means that every 50 years, the quantity of gold in the world doubles, right? So eventually over time, Bitcoin stock to flow is going to go to infinity. So it's never going to double at some point because it's just such a scarce asset, right? The global supply of gold increases by 2% a year. So after 50 years, you double. But what's really beautiful about Bitcoin, the way it was designed, is that at some point it's going to go to infinity, which means that's going to be infinitely scarce versus a fiat currency that has infinite supply. And so if you just do the math on that, that's why people always have this 21 million divided by infinity. Basically, the price of Bitcoin is going to the moon, right? And so I think we just need to kind of think about, we got to put this into historical perspective too, right? Every fiat currency in the world has devalued against real assets since the beginning of time, right? A lot of people don't know this, but in the 1600s, the Dutch guilder was the global reserve currency of the world. The Dutch actually created the first stock exchange in the world in the 1600s, and they had the Dutch East India Company, and they were kind of the largest company at the time. From there, you had the Great Britain with the British pound. That was the global reserve currency for a while when the US was trying to become a colony. And then obviously it became the United States dollar after that during World War II. These things rise and fall, right? There's a cyclical nature that happens over centuries.
It's like 90 to 100 years or something that they last, 90 to 110 years.
It's typically about like around 100 years, right? And so, we're nearing the end of the US dollar dominance, right? And so we are going to transition to a new to a new currency at some point. The question is, what is it going to be? Is it going to be another fiat centrally planned currency, or is it going to use and leverage technology and cryptography to deliver something to people that's a little bit more fair and honestly better for society? So obviously that's a big power struggle between the powers that exist and the powers that will become in the future. But I am optimistic, and I do think eventually over time the truth will prevail, because there's a lot of young people who are pushing for Bitcoin to be adopted. You're starting to see other nations adopt Bitcoin, even other small nations like El Salvador or some small countries in Africa. But the momentum is really building up, and to think that Bitcoin is legal tender in a country after 13 years of its existence. I mean, back in 2009, Satoshi probably never expected that to even happen in such a short time frame, right? So I think we just underestimate what can happen over time. And I think the next decade is going to be just as explosive for people.
Oh, I agree so much. and I agree, man. It's the shift, the transition to these types of systems are that's why I said what I said in the beginning, because it was less than 10 years ago that I was like, oh, this could do it. But I was couldn't even imagine that in a decade from that point, countries would be adopting it. I mean, that is just,
we've came so far.
So far. And it's funny because like like I said in the beginning, there has been a shift, a hyper focus towards stable coins and the creation of that. And one of the ways that they're, in my opinion, is that they're just creating these new products. They're testing them out. They're putting them out into the world and seeing what happens. And one of the ways that they're backing, creating a stable coin that's backed by something for that representation is algorithmic pegging, is what they call it. But it's when you use an algorithm, right? You use a blockchain to keep the value of that currency, or the pegging, or the 1-to-1 ratio to the dollar above or at that specific point. So it's interesting that like they're testing these out. There was a Swan event that just happened with one of the projects, Luna UST. UST was a stable coin, and just in my opinion, it was an attack, and it kind of was like a stress test of one of their products, and it failed, which is fine, right? Because at the end of the day, for them, they're looking at the bigger picture, going, okay, well that failed. Let's try something different that is going to incorporate this, whatever. But it's cool. Like we're in a point right now where blockchain, right? The idea of blockchain, or that concept, is being massaged. Like we're like, let's try this out and see what it is. Now, here's my question to you. Do you see true sovereignty on those levels moving forward though? Or are they just going to perpetuate the same old bullshit system on the blockchain?
I think it's going to be a very slow transition, right? The first thing I tell people is, if you own Bitcoin, store, self custody, right? Have it on your own hardware wallet. Don't keep it on an exchange like Coinbase or Gemini, because even Coinbase came out with their 10Q a couple of weeks ago, and they said that if they encountered bankruptcy, that you're technically considered a general creditor, which means that they could seize all of your crypto assets from you in the case of a bankruptcy, which is a huge red flag. I mean, imagine if Chase or Citibank were to do that with your checking account. I mean, people would be absolutely up in arms. So I do think it's going to be a massive transition. A lot of education that needs to be put into given to people about, the pros and cons of this. I mean, just speaking real quickly about the Terra US stable issue. I mean, the algorithmic stablecoin, people have to realize these are experiments. A lot of stuff that's going on in crypto are still experiments. The intention is good behind it. I just think that the execution can have issues occasionally. And so, with the algorithmic stablecoin, what they were doing essentially was they were backing the value of US Terra, which is the stable coin, by having collateral of Luna, Bitcoin, Avalanche, and a couple other cryptocurrencies. And that works in a bull market, but it doesn't work in a bear market, because the value of your collateral goes down. People start redeeming their US Terra. You start having what's called a bank run, right? And so this is what happened. And then now they become forced sellers of Bitcoin, Luna, and Avalanche. And that's why you saw a lot of carnage across crypto markets over the past couple of weeks. And obviously, UST depegged, and I think people lost about $40 to $60 billion of real money. I mean, that's really unfortunate, right? But I think people need to understand that when they're getting involved in these protocols, that there are a lot of experiments that are going on. I'll tell you, the one experiment that hasn't failed yet is Bitcoin, right? There's nothing inherently wrong with Bitcoin. It's been going on for 13 years, and trust me, China's tried to attack it by getting rid of all their miners. They haven't been able to do it. So if there was one crypto I could own, it would be Bitcoin. And then what I would say to people is, if you're interested in looking at other things and experimenting with it, understand that this is still very much in the alpha and beta versions of them, right? You can lose money. And so I don't want people to just and I think there's a lot of innovation that's going on, and it's incredibly exciting. And it makes me really optimistic about the future of money and finance. But again, like you have to realize that there are going to be missteps during this whole process, and just don't put all your eggs in one basket.
Don't put all your eggs in one basket. Diversify it all as much as you can. Well, not a lot, right? You want to be in control of your diversification. Sure. That was my issue. I diversified too much, and I'm like, I have 34 assets. I don't know what to do.
Yeah, I would say, it's funny. Ray Dalio, the CIO of Bridgewater, founder and CIO of Bridgewater, he came up with this term called the Holy Grail allocation. And basically it's 10 to 20 assets is all you need to own. Don't overthink it, right? I think there is a lot of value to be diversified in terms of protecting wealth, but there is also a huge benefit to concentrating your investments to generate wealth, right? And sometimes, listen, Bitcoin is by far the largest percentage of my net worth. And I'm going to keep it that way until, it reaches a certain level where I feel like I can diversify my wealth. But I think there's a nice balance with it. And it's like, you don't need to own a million things under the sun. Own things that you understand, that you trust, that you've done research on, that you feel comfortable owning. Even if it's down 20, 30%, what you own. Like, listen, Bitcoin's down over 50% from its all-time highs. I'm not sweating. I'm buying a little bit more. Still waiting for it to come down so I could buy more. But at the end of the day, I know what I own. Unlike something like Luna, where it's like you went from $100 a coin to basically a sub penny in like a couple of weeks, and there's just
it was like 5 days. It was like 5 days.
It was insane. Yeah, it was. I was.
I've never seen. Huh?
We were actually short during that movement, so it was great. I was happy about that. But you never know when these things are going to happen, or when cryptos are going to fail. And unfortunately, a lot of people get caught up in it and lose a ton of money, and then their faith is shaken in the industry. But that's just one protocol, right? It's like one business going out of business. Like that's bound to happen.
And that's a whole conversation of itself. We don't have to go down on it, but it's like the emotional trading. Like if you're not aware of your emotions and your connection, or like how much worth you gave that specific project, you can get stuck in it and get sucked into it, and don't sell, or you hold on too long, or you don't hold enough. So yeah, definitely be aware of those emotions and how they can affect your actions. Yeah, no, this conversation is so great. I love it. The crypto talk is definitely starting to increase again. There's definitely been a hyper focus towards the industry, and I'm happy because it is a path towards practical steps of abundance, towards practical steps of disconnecting from those systems. So I want to talk a little bit about, and we can end here, about what we're doing together, so our audience can know what to look forward to. So Brian and I, we've been discussing and creating something, I think we're going to start with like a monthly or bi-weekly, something like that, where we'll do a session. We'll sit like this and kind of go through the markets, go through his write-up that he did for that previous month, and then discuss like what we're doing, kind of like what we did here for this interview, but more focused on the current events, and then what we're moving towards. So I don't know if you want to share something, Brian, about your company and about, all the stuff that you have to offer to this, and what it looks like for you.
Yeah. So I run money for family and friends, and I come out with this monthly letter called the Netizen Revolution. So it's a Substack you can subscribe to for free. I usually post those the first or second week of every month. So the next one will probably come out probably first week of June, and just kind of recapping the month. I try to break it up and try to make it kind of digestible for people, because a lot of these concepts are tough. And what I would suggest if it's your first time reading the letter, definitely go back and read the earlier letters, because I do tie in a lot of these topics, and I try to thread the needle and just kind of keep the narrative going of what I'm trying to kind of show you guys. But I usually give actionable things to think about. So I give kind of like a short, medium, long-term, too long didn't read outlook. So you can kind of just parse through that. And then if you want to get a little nerdier, I do like a section with charts and everything, where I kind of walk through the math behind actually what's going on in the economy. Sometimes it's crypto. Most recently, it's been focused on macro, just because that's been driving the markets. And I talk a lot about geopolitics, Russia, Ukraine, US, the US dollar system and all that stuff. But there's a lot of good information in there, and hopefully the people who are already subscribed to it have saved money, or even potentially made money from listening to it. But it's just a way for me to kind of put my thoughts out there, and just help out how I can. Not everyone has the money to invest in a fund. I understand that, but if you want to follow along and kind of get some insights, be happy, register and check it out.
Yeah. So the plan here is definitely sign up for his Substack. If you want to find his website, it's Netizen, is Netizen capital.nyc, or you can find him on Instagram. It's Netizencapital, at Netizencapital. We're working towards creating something that is going to be consistent, that is going to be, we're going to be showing up to give you guys not only the perspective of the crypto market that I'm going to be sharing a little bit of, and my perspective of the mindset around what's currently happening, but also I call it real world markets, like stocks, commodities, and the economies around the world. I mean, you go global with this. It's not just the U.S. economy, right? You go global with these numbers.
Yeah. Like I look at China, Europe, Latin America, U.S. But we trade across all asset classes. So we'll trade stocks, we'll trade commodities, we'll trade volatility, we'll trade crypto. I mean, we go across the board. We'll trade bonds also. But yeah, the focus of the fund is, I do have a thesis around it, and it's really that we're in the middle of this bursting global sovereign debt crisis. And, I'm trying to take advantage of how that unfolds. And so there'll be times where we're allocated to crypto more so than others. I would say right now is not the time to own crypto in your portfolio. But there are times that, you got to pick your spots with the market. And so, you can't force it what to do, but you can be positioned when you're ready.
And again, I love this because this is really going to help you, the individual that's listening here, to put your finger on the pulse of what is happening, this transition between the old systems to these new systems. And like you just mentioned, Brian, in your thesis, that's what's happening. Like we're in this transition to sovereignty, and it's massive. It's massive, massive. And again, I love what you're doing. You've recognized, you've seen the writing on the wall, and you're like, I'm going to set myself up for this shift.
Yes, sir.
And so, like, if you guys want to, be on that same page with us and tap into that same pulse, make sure you guys listen in on these conversations. This episode is definitely going to be the beginning of a lot of videos, a lot of things that we're going to be putting out moving forward, so that we can get a community going. And I think that's the biggest takeaway of everything that's happening is this coming together of, humanity. It's like this, like we're becoming more aware of the control and the pressures that are being put around our lives, not only on this federal level, but also even on the local levels, to the point where like, okay, we got to start finding each other and start connect to each other and become stronger together. And so if you want to be a part of that community, make sure you guys check it out and be a part of it and move along with us. Brian, thank you, sir. Thank you so much. I love this conversation. I can see how this is going to be an amazing show on whatever we come up with, because we're still kind of fine tuning that. But one last thing, and I always like to ask this question at the end of these interviews. If you're standing in front of millions of people and you have a few sentences to say what you want to leave for humanity, what do you say?
Oh man, this is good. I say that the most important thing in life is what you believe.
Love it. I love it. Dude, I mean, that's amazing because a lot of people
think about that one.
A lot of people don't even know what they believe, right?
100%.
A lot of people don't even know.
Yeah.
So I love that. I love that. Believe in something, man. Just believe in something.
Yeah.
Well, thank you, sir. You're great. I'm sure the audience loved every minute of it. And I can't wait to reconnect so that we can get this whole thing going and sharing our wisdom, our knowledge, our discernments, our research, everything to the people that are listening.
Thanks for having me, Otto. Appreciate it.
Thank you. And always remember, gamify your abundance. Love you guys. Wow. 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 I loved that conversation with Brian. If you don't see the many layers that he allows himself to go into when it comes to global markets, I don't know what to tell you. This individual has done the work, has put in the time. He has pretty much almost mastered, in my opinion. I say almost, maybe just because of his age, but I feel like he knows what he's talking about. He is a master at this topic. And the fact that he became very aware initially in this transition of the systems, going from this old centralized system to the new ones, that to me shows the entrepreneurial bone more than anything. That shows me that he sees opportunities in the gaps, right? He sees arbitrage. And that's so important in the crypto space. If you can't see arbitrage, if you can't see the opportunities, you're going to get stuck in the technical analysis trading part of it, right? Which is like, all right, well, all these variables, and invest and hope to God it goes up. And so crypto is leaning now towards becoming more obviously a strategy place, a place where you strategize, not that you hope and pray that it goes up. So if you want to dive in deeper with Brian and what he's doing with his fund and the Substack that he's writing on a monthly basis, make sure you check out his website, Netizencapital.nyc. That's Netizen with an N as in Nancy, Netizen, capital.nyc, or you find him on Instagram, Netizen Capital, or his individual account, Brian N. Velez, Velez. He and I are going to be working on something together, like I mentioned in the episode. And that's going to be like I said, bi-weekly or monthly show that will give you a summary of the previous couple of weeks in the markets, global markets, not only the crypto markets, what is currently happening during the interview, as well as how do we move forward and how do we prepare for what's to come, moving forward. So if you want to have your finger on the pulse, if you want to be educated and start that process of education, don't miss this. Don't miss this opportunity to be a part of this community of people that are driving towards the same goals. And if you want to, up level, if you want to go to the next level of education, then check out my course. Check out my Crypto Made Easy 22 plus videos, 7.5 hour course. I mean, that goes really deep into the many, many layers of crypto and really to understand those layers and why they work and how they work. And then if you want to take it a step further, I definitely offer up and would advise you to take my Unbank Yourself class. That's a 4-week, 5-call. I go through the unbanking process from the SWIFT system into the blockchain system, as well as looking at certain passive income options. Like Brian mentioned, it is definitely a time to be at least educating yourself on this new system and what it looks like, if not already creating a rule of dollar cost averaging into the space, okay? Currently, it seems like it's better to be in fiat, to be on the dollar, but that doesn't mean, remember, when you stagnate energy, when you stagnate your finances, you're essentially keeping it open for siphoning, for somebody to come in and siphon that energy and siphon the money out of you. So just be aware. We're in a transitional time right now, and it's really critical to educate and to become more and more in tune and tap into that pulse so that you're not being left behind in the old systems. All right, everyone. I loved this conversation, and I hope you did as well. Make sure you smash the subscribe button for more interviews and more videos. Follow me on Instagram, TikTok, all the good places. And always remember to gamify your abundance. Love you guys.